Well, welcome everyone. This is David Morgan of themorganreport.com, and I have a special treat. I have Bill Holter with me today. And Bill and I have a pretty good history going back. We actually went to a conference in Germany together some time ago. And Bill, I have to digress for a minute, but remember after we each did our speech, we were kind of sitting in that oh room relaxing, and we had a bunch of your fans and mine come up and ask us about the future. And I remember one of the main topics from the Germans' perspective was the coming war. But I don't want to digress too far. We might come to that at the end of this interview. But Bill, there's been a lot of talk between what's taken place recently, and I think you were prime in it, and that's why I came to you, Mr. Bill Holter, to talk about this $50 million purchase that was split, as far as I understand it, between gold and silver. Can you take us through that, please?
Yeah, it was a $50 million order. The client was willing to go up to 70% of that in silver over gold just because of the ratio. It turns out, and the client wanted all U.S. coin, so that basically meant silver eagles, junk silver, half dollars, and silver dollars. And we were only able to fill, it took about 36 hours. Actually, let me digress a little bit. There was a discussion as to how we would do this logistically. Did we want to do it all at once and just blitz the market, or did we want to try to do it slowly and quietly over, say, a couple week period of time? And it was decided that with this size, it was better to just find out what was available and take everything all at once. And actually that worked out well because by the end of the first day, we were able to do 23 million in Eagles, junk, etc. And that was without pushing the premiums up at all. So by the end of the day, basically dealers across the United States were scratching their head and saying, what the heck just happened? So at that point, we decided, okay, now let's start working on gold. The client wanted U.S. coin again. So we started with the pre-1933 gold, and if we ran out of that, we were going to fall back on gold eagles. Well, we cleaned up, started working on it that afternoon, continued the next morning, and the next morning we were able to find about $4 million more in silver. So that brought us to 27 million, and we completed the order that afternoon. Now, the timing of this was just before the 4th of July 3-day weekend, and the client was, and I think justifiably, nervous with everything that's going on, going into a 3-day weekend. The money was in a bank to be wired. The money was wired ahead of time and wanted the trade completed, the money out of the bank and done by Friday close of business. We finished making purchases mid-late day on Thursday, and every wholesaler was paid and everything was settled by close of business on Friday. So we did get the entire order done by Friday afternoon close of business, and the client had, full title, full ownership to the metal before the weekend started.
Well, that's sort of like the Bill Holter that I know. Nice job. I think there's a couple.
Well, you got to give kudos to Andy
of
Scheckman.
course.
Yeah,
Of course.
Andy's operation. He has the contacts all over the country, and they worked like maniacs for 2-3 days to have all the paperwork done correct, everything settled, and completely finished and cleaned up by 5 o'clock Friday. So kudos to Andy.
Yeah, I agree, and I should have probably stated it that way. I had an actual private conversation with Andy that outlined a great deal of this already to me. So, Bill, I think the next question there are two main questions in my mind, and what some of my followers have asked. One is there's an indication that this may be one of several purchases in the future. And I want to get your take on that. Is that kind of is that a rumor? Is that true? It's obviously an unknown. I imagine she could probably decide she's got enough, but I think the indication is there's more coming. What's the story on
Yeah,
that?
at this point, there are no future orders, but there have been discussions that there very well may be future orders, and it's possible that the orders will be larger than this, and obviously would not be able to be done all in U.S. coin, just because there's not enough U.S. coin out there.
And that's my second question. So with that fact that we both know, to your understanding, is the client willing to go with, let's say, COMEX grade bars?
As far as COMEX bars are concerned, that would be the absolute last choice.
Okay, can you elaborate?
I mean, there's other bar form. Yeah, there's other bar form. I mean, they wanted the best form of metal, and in the U.S., the best form of metal for an American to own are U.S. coin. And the reason for that, if there was a confiscation, it would be pretty difficult for the mint to sell you Eagles, either silver or gold, this week, and then next week tell you got to turn them in. It's different than 1933 because that was the coin of the realm. Whereas since 1986, with the Eagle program, that is the mint selling directly to the public. So it'd be pretty difficult, or certainly more difficult than calling in foreign sovereigns, generics, and bars. So the client wanted the best form, and it's my understanding that in the future they would want whatever's best remaining, which would mean first would be foreign sovereigns. You would be looking at Maple Leafs and Britannias and Krugerrands and et cetera. Then you've got bars and generic rounds at the bottom of the list.
Okay, thanks. That's kind of the main question that I personally had, as well as I said many others, because there's a case to be made. I want your take on it, Bill. That this whole thing is a paper game. It's a derivative market, is what sets the price, and yet that price is set on a commercial bar, which is is roughly 1,000 troy ounces. And there's been an argument made that if you took that tact, in other words, started offloading COMEX bars, that you're going to be able to put more physical pressure on the market. Do you want to comment on that?
Yeah, I don't believe that it's the client's intention or wishes or anything to put pressure on the market. It's basically just getting capital out of the paper system, and in doing that, they want the best form. And like I said, in my opinion, in the client's opinion, the best form are U.S. mint lineage coin.
Sure. If you don't mind me drilling down a little bit, I did talk to Andy, but not a lot of specifics. It's my perception that the bag market's pretty tight. In fact, I talked to a friend of mine that's been in the business 40 years. And I asked him what the price was on dollar bags. And I think the cheapest was 25,000 and the most expensive was 36,000. My question, Bill, is how much bag silver, not just dollar bags, which is very rare, but halves, dimes, and quarters are out there?
Good question. And actually, I can tell you as of this morning, I have an order I'm working for tomorrow. It's just under $1 million, and wanted to do as much junk as possible. And this is an entirely silver order. Unless we can't fill the silver, then would go to gold. But we have a whopping 15 bags of junk, so you're looking at 10,000 ounces, roughly.
Yep.
And those cannot be delivered for 4 to 5 weeks. Those are inbound. We own them, but they can't be delivered for 4 to 5 weeks. And we do have some Eagles. When we did the big order, we did take some future deliveries.
So, Bill, if the market is tight, as you indicated, for the bag market, I mean, what's it going to take for this market to break free? This is the question I get all the time. But we both know the, you know, the eagle market and the bag market are extremely tight, and yet we're still sitting here at, you know, sub $20 silver. What does it take for this market to start moving?
Well, we're really not at sub $20 silver. I mean, I don't think you could find any silver anywhere under $20. You're talking about the paper, the COMEX market, and I've said all along that what will break that is failure to deliver. So you get some type of an event or some type of buyer or buyers that step up and say, "Hey, I'm not rolling this thing over. I want the metal." Once you have that, then the paper market breaks. As far as the physical market is concerned, I am working an order just under $1 million for tomorrow. It is they want to do all silver. I found Miles Franklin has found a whopping 15 bags of junk that cannot be delivered for about 4+ weeks. So that's roughly a third of the order, and we've got some Silver Eagles that are coming in at out 4 to 6 weeks. That's future delivery. So we should be able to fill the order. I think there's 25,000 Eagles or so that are going to be coming. So that's how tight it is. I mean, this is the entire U.S. silver coin market. I mean, got cleaned up, and here we are 4 weeks later, and it's still crippled.
Sure. Well, I did a little thought experiment, Bill. I'd like to think this through with you and obviously get your take on it. But if you look at the overall market, what you'll find is that the amount of silver divided into categories in any given year goes roughly something like this. 55% of the market goes to industrial use. 20%, 25% goes into silver jewelry. Silverware varies 7-10%. So on any given average year, and it varies, you might have like 10% of the market going into physical demand. And so if you take that premise of a billion ounce market, and you take 10% of that for monetary demand, which will change, as we both know, it's changing as we speak, that's 100 million ounces. And so if you multiply that by 20 or 25, you've got 2.5 billion fiat currency units available. So if you get, a few people that are looking, a few more billionaires in here relative to the space available, as you've already outlined, I think we're pretty much on our way. What say you?
Yeah, absolutely. And even prior to this, all you had to do was look at premiums across the board, even with bars. I mean, you're looking at 350 over spot on a 100-ounce bar, which is one of the poorest forms of ownership. So to see the premiums where they've been, literally for the last year and a half, 2 years, that shows you that the retail market, the retail availability is very, very tight.
Bill, I hadn't thought of this. I just, you've made such a strong case. I mean, do you think the market's, I'll use it, broken in quotation marks right now, basically? I mean, with these kind of spreads, you and I both know that these spreads happen occasionally, but they usually come back. But this one hasn't. This has gone on and on and on. It continues probably into the foreseeable future. It's almost as if the market's broken. We've got the real silver market from the retail side, and then we've got this derivative market that occasionally gets a commercial bar delivered against.
Yeah, I think you're right. I do believe that the market is broken. If you look at the paper price, it's a fraud. When was the last time you were able to buy at spot anything? I mean, I can remember going back to 2016, 17, and I've been a big buyer for customers of junk all along the way. I think junk silver is the best form of ownership. I can remember buying for customers at 50 cents over spot.
Sure.
So at that point in time, you had the retail physical market in line with COMEX, and there's been a complete break between the two.
Well, Bill, I think you handled all that I have. I'm sure I'm going to get a plethora of emails. You should have, might have, could have asked Bill this. Certainly, I'd invite you back numerous times. I know your time is as valuable as anybody's, and we really commend you for being able to pull it off. I got a couple of follow-up. I mean, when you got the initial order, and I heard Andy on Wall Street Silver, and I've heard these too. I mean, I've brokered some deals, not anything like this, but occasionally you'll hear these 10 million, 25 million, and you kind of just blow them off. It's like, oh, come on. But yet, obviously, you didn't. But did you initially think, like, is this real or not?
In the very first conversation, I heard the number, and yeah, I kind of in the back of my head said, well, yeah, we'll see. But the client was very knowledgeable, very straightforward. I had very good vibes from the start, and by the end of the conversation, I was asked to send wire instructions. That was on a Friday, and was told that money would be wired Monday. Got a call fairly early on Monday, saying that money, I've filled everything out at the bank. And actually, this is the rest of the story. You probably want to hear this. So everything was done Monday, and I got a call, I don't know, maybe 3 o'clock in the afternoon from the client saying, well, the money's not going to be wired today. The bank didn't wire it. And I asked why, and she said basically that the bank said you can't do it from a branch. You have to go to the main office. So they drove over 100 miles to get to the main branch. On Tuesday, they locked her in a room, basically, and paraded bank officers in to try to convince her not to move the money. And by the end of the day, everything was filled out. Was expected that it would be wired on Tuesday. Miles Franklin got a phone call from the bank's compliance officer asking, just confirming the wire instructions. They wanted the name of the receiving, a person on the receiving end of the bank. They actually called me and asked me if Miles Franklin was big enough to handle this type of order. And I said, of course, and then some. And I said, and then some, because it was probably, 5 or 6 years ago, I tried to participate in bidding on one of Eric Sprott's deals. And at that point, I knew that Miles Franklin had a credit line of $300 million, which I've since found out it's $500 million now. So Tuesday came and went, no wire. I got a call early on Wednesday from the client saying I'm not going back into the branch. I called the bank president, who's been missing in action for the last 2 days. And this is a guy that would pick up the phone on the first or second ring for this client. And they left a message saying if the money's not wired by 12 o'clock today, I'm going to go to OFI. And OFI it's death for a bank if they're holding client money up. So the wire came, it got there actually before noontime, and that's the rest of the story.
What a story, Bill. Wow. So my interpretation, like the bank was kind of dragging their feet, it seems, from what you've told me. I mean, it seems to be a divide between the paper pushers and the sound money advocates. Would you say this was?
Oh, absolutely.
Yeah. Was this an example?
Yeah, absolutely.
Yeah. Okay. All right.
And just remember when this was. This was just before the 4th of July holiday. And when is the quarter end? The quarter end was Friday.
Yeah.
So it's possible the bank did not want to lose $50 million in deposits at the end of the quarter.
Sure.
Because it doesn't look good.
Right. Very good. Well, Bill, again, thank you for your time. Is there anything you'd like to summarize or reemphasize before we call it a day?
I guess a little bit off of this particular topic, I would just say to people, don't worry about the price, just keep stacking, because mathematically, because of the debt outstanding, the system's going to collapse, and all fiat currencies are debt based. So when debt collapses, so do currencies, and you will count your wealth in the future in ounces rather than in dollars or euros or yen or what have you.
Perfect. Great way to end it. Thank you, Bill. Appreciate it.
Thank you, David.